You've probably heard that the price of gold is all about simple supply and demand, right? Well, what if I told you that's not really the whole story? In this explainer, we're going to pull back the curtain and look at the powerful forces and, the hidden players who are really calling the shots. Okay? Let's get into it.
So let's start with this one, powerful idea. Those record highs for gold that we've been seeing, they're not just some random thing happening in the market. No, they're being driven.
That's right. You should think of it less like a free, open market and more like a high-stakes global chess match. There are just a few key players making these huge strategic moves that send ripples through the entire world economy.
All right, so who are we talking about here? Who are these players? Let's unmask them one by one so we can really understand the game they're playing. First up are the real heavyweights, the central banks of major countries. And listen, these guys are not just sitting on the sidelines watching. Oh no, they are active, strategic buyers, and they're buying on a massive scale. So here's what you got to understand. Their motivation is everything. For countries like China, Russia, and India, buying up gold is a huge geopolitical move. They're all in on a strategy that's being called de-dollarization. It just means they want to depend less on the US dollar. By hoarding gold, they're basically strengthening their own economies, giving them more power. And what this does is create this constant, powerful demand for gold that just keeps pushing the price up and up.
And the numbers, they're just mind-boggling. Over 1,000 tons. Just try to wrap your head around that. That's almost a quarter of all the gold mined in the entire world during that time. It just shows you the incredible scale of their influence. This isn't just a little market noise. This is a force that is actively moving the market.
Okay, so from governments, let's switch gears and head to our next player. We're moving from the world of geopolitics into the super fast-paced world of high finance. And here, the players are the big Wall Street institutions. Now, for these financial giants, gold plays a totally different role. For them, it's a defensive move. It's their shield, their hedge against inflation and all the chaos you see in the currency markets. But the way they do it is what's so interesting. They use these things called ETFs to pump enormous amounts of money into and out of gold, like super fast. This is what can cause those insane, rapid price spikes. We're talking about huge changes in a matter of hours, not years.
And this brings us to a much more complicated and frankly controversial side of Wall Street's influence, the futures market. This is where people are trading contracts for gold to be delivered later. But here's the crazy part. Almost no actual physical gold ever changes hands. And that has led to some pretty serious accusations about what this market is really being used for.
Now, it's really important to be clear here. Our source material points out that some of these huge financial players have been accused of using these paper contracts to actually manipulate gold prices. The claim is that by placing these gigantic orders, they can create fake pressure, pushing the market up or down to help their own bottom line. We're just reporting on the accusation because it's a really big part of the conversation around who's controlling the price.
So far, we've talked a lot about the people buying the gold, but what about the supply side? This brings us to our third group of power players, the massive corporations that are literally pulling the gold out of the ground.
You can think of these companies as the gatekeepers. They are the ones who decide exactly how much new gold comes into the market and when. So by tweaking their mining output, they can directly influence how scarce gold seems to be, which of course is a huge driver of its value. In the past, this has even looked like cartels working together to deliberately choke off the supply, just to keep prices high.
Okay, so we've met the big buyers and the big suppliers. But who puts the actual price tag on it? Where does that number you see on the news every day actually come from? Well, this is where the official benchmark setters step in.
It pretty much boils down to two main institutions. Over in New York, you've got COMEX, and they set the price for those futures contracts, the paper gold we were just talking about. Then, in London, you have the LBMA, and they set the benchmark price for the real deal, the actual physical gold bars sitting in vaults. And these two prices are totally intertwined, forming the foundation for all gold trading around the world.
But, and this is the critical link, these benchmark prices are not created in a vacuum. Of course not. They are directly pushed and pulled by all the other forces we've talked about, the massive buying from central banks, the lightning-fast trading from hedge funds, and the supply decisions from the mining companies. It's the meeting point where all those power plays get boiled down into one single number.
So, we've seen the players, we've seen their strategies. The big question is, what on earth does all this mean for you, the everyday investor? How can you actually use this information? Okay, if you remember one thing from this whole explainer, let it be this. When you're looking at gold, you have to understand that you're not just participating in some simple, free market. You are stepping onto a field where giants are moving the pieces. Just knowing that, that's the first step to making much smarter decisions.
Let's do a super quick recap. You've got the central banks, who are driving that long-term strategic demand. You've got the financial giants, creating all that short-term volatility. The mining corporations control the physical supply coming out of the ground. And finally, the benchmark setters make the price official based on everything the other guys are doing. See? Each one has their own lever of control.
So, what should you be watching? It's actually pretty simple. Just follow the players. Keep your eyes on any reports about central banks buying gold. Pay attention to the money flowing in and out of those big gold ETFs. And definitely read the forecasts from the major mining companies. These are the signals that tell you where the giants might be moving next.
You see, understanding that the price of gold is really shaped by these powerful forces, it just changes everything. It's not about guessing anymore, it's about watching the key players on the board. So the real question we want to leave you with is this. Now that you know who's really in control, what's your next move going to be?